Hello guys, welcome back to Zodiac Trader. So today we're going to look at the credit card sector. We're going to look at why most Americans are broke at this moment, unlike what the mainstream media have claimed that the U.S. economy is in a perfect condition. Right now, there are several Fed officials, including like the head of Treasury, Janet Yellen. They are warned about the economy and also about the delinquency rate in loans and mortgages sector. So we're going to look at all these economic data and explain a little bit of why we're most of Americans are likely to suffer because of the debt burdens right now. As we all know, we're right now heading to a higher for longer kind of situation. As I have been saying this repeatedly from my previous video, I've been saying we're going to head for high for longer for a long time. So, and I don't reckon we're going not we're of course we're not going to have any of the interest rate lower. We are not going to have the lowering of interest rate, and most likely we're going to have a high interest rate for a very long time, and until the inflation goes back down and control back to 2%. And right now we're having these CPI rate, and CPI is at 3.4%, and we're still seeing a lot of inflation pressuring the economy system. And because that interest rate has gone up, and because of the inflation, people are actually paying more money for their credit cards. So there are a lot of people suffer because they have more debt burden. They are actually paying for more for credit cards, and that hence why that's going to impact the economy. Okay, so the New York Fed has released a household debt and credit report on the first quarter. So this should give us a little glimpse of what's happening right now in the U.S. economy system. So household debt climbs to 17.69 trillion in the first quarter. So the delinquency rate rise again. So we're actually seeing total household debt rising, reaching another 18 trillion level. And we're also seeing the credit card, even though the credit card balances declined, but still 9% of credit card balances and 8% of all the loans annualized transitions into delinquency. That means more people are unable to pay off the debt because of the inflation problem. Every prices goes up. If you go to supermarket, the milk is becoming more pricey, and the bread, and not to mention the fuel. So everything is becoming more expensive. And in my previous video, I actually explained how the reason why insurance premium gone up so high. Because if you are actually American citizens, that you look around, you're actually paying a lot more for your insurance. And the reason for that is because you have these risk premium because of high interest rate. So the insurer are going to calculate the interest rate risk, and they are going to put that premium on your insurance. So that means you're going to pay more money for your own insurance. And if you actually live in the United States, you know what I'm saying. It is almost impossible to live without insurance protection, because the medical expense, the auto expense could be really expensive if you're not covered by the insurance. So that's why but that insurance account doesn't go to the CPI figure. So because the Biden administration economists would say, okay, the CPI is now at 3.4%, but still we have achieved to some extent that we're we have successfully controlled or say tamed that inflation. But in reality, people are still suffering because people are paying more for insurance, and that doesn't reflect on the inflation number. So guys, that would be the problem, because economists wouldn't look at your insurance number and say, hey, people can actually afford less. People are becoming poorer. No, economists are not going to say that. Economists are going to say the CPI has gone lower, so people are obviously more happier because the inflation has been tamed. So that it's a pure out lie, guys. That is, like pure out bullshit. Forgive my language, but that is what it is. So if we look at the household debt, right now we're seeing the blue section is housing debt. We're seeing the pink section, which is indicates non-housing debt. We're seeing this total debt balances just skyrocketed, and we're actually seeing the difference between the non-housing debt and housing debt becoming like more, because that we're seeing that we're having more of the non-housing debt. That means people are actually paying more with their credit cards, because that's common sense. Most people have mortgages. Most people pay their house. They have down payments. They bought a house, and then the other debt they would have just credit debt. That's it. So if your like non-housing debt skyrocketed and kind of diminishing, and your kind of your housing debt is like the scale of your housing debt, the proportionally has decreased. That means you have actually spending more money on the non-housing sector. Okay, so that's a common sense that shows people are actually poorer instead of richer. Okay, so consumer credit reports increased by $190 billion, but the fourth quarter of 2024 stood at 12.44 trillion at the end of March. So that's a very scary number. And auto loan balance increased by $9 billion and continue to go up. And I have covered this as well, because the auto insurance has gone up. You actually pay more for the insurance fee, because the risk premium has gone high. Okay, and other like credit cards decreased by like $11 billion, and student loan balances were effectively flat. So given by the status quo, it's kind of easy to understand why we're going through this. Look, a lot of economists or say these, mainstream media trying to, give you this golden equation that, the stock market gone higher, the stock index is going up. That's why people are having better life. The people are having awesome life because the stock market is so good, and stock market can equals to real economy. But real economy doesn't work like that. Doesn't work that way. What the mainstream media are trying to persuade you is that as long as the stock market runs well, people believe that the economy is in good shape. That is a straight lie, because nowadays with QE and all these monetary policies, you have a huge gap, increasingly larger gap between the rich and the poor. So what you're seeing now is, like rich people putting a lot of liquidity and money in the stock market. They put their money in different, financial vehicles. So they have, plenty, I would say, enough of cash. They wouldn't just cash out all their money from the capital market. So they will make more money from the stock market, from the real estate market, and that money, it's a lot more than what people could earn from honest work, from their wage growth. So this is what's happening here. It's that if you work, you're getting salary on monthly basis. You don't get this. You don't make as much money, and it turns out you have to pay for everything's going higher, and you have to pay for all the basic goods and needs. So the mainstream media trying to give you these straight lies, so just don't buy it. Okay, Right now, we're seeing other articles about delinquency is increasing in the cards and the max out borrowers. So you will see that the number of max out borrowers has increased significantly. So this is going to impact a lot more to the working poor people. Like this is another straight lie because they tell you that if the unemployment rate is gone down lower, that means people have job. If people have job, people are not suffering. That is another big lie because right now we have a huge number of working poor people. That these working poor people like work from one job to another job. Like these people could have three jobs simultaneously. For God forbid, I don't know how they have achieved it. I think these people are great, and these people are suffering because most of the jobs don't have that much of payment. They would they are not like those kind of regular job. They're more like a part time job or more like a contractor. So these people they have to find a job from time to time, and the reason and these people have job but they're poor, and these people are just working poor people. Like these people have no money, have no ability to resist inflation. That's why when government tries to tell you when the unemployment rate is going down, does that necessarily mean the economy is good? I mean, think again. So now let's look at different charts. Here we're seeing this delinquency rate on loans secured by real estate slowly go up because most of the loans and mortgages these are long term, but we expect when the interest rate go higher and that higher for longer became like priced in, we're going to see this delinquency rate solid again. And the second chart will look at the delinquency rate on consumer loans or commercial banks. We're seeing this. This is a huge slope right here, guys. So we're seeing this a delinquency rate skyrocketed. It's even above the previous low 2020 level. That means a lot of consumers started to gone broke. And we have to understand a lot of people like people who have maxed out their consumer loans. I mean like proportionally or just saying percentage wise, they're probably not having a home. So we're talking about different people. But some people could have a house mortgage, but in the same time with consumer loans. But we're saying out of possibility wise, people who tend to max out their loans don't wouldn't have mortgages because they have because they already maxed out, right? Okay, so this is the most scary chart because from this year we're seeing these personal saving rate has gone down to really low level like 680. So this is if we look at 5 years from the previous 2020 when Biden administration give free money to American citizens, these saving rate could go like 6,000. Okay, it goes to 6,000 billions of dollars, and right now we only have 671 billions dollars. That's like nearly like 10%. That is scary. So if we look at even longer term, that we look at this longer term, we're still at the history low level. If we look at what happened in 2008, it's similar number 600. Okay, so I'm not saying like we're repeating this 08 submortgage crisis again, but what I'm saying is right now the Biden administration created this problem, and then now they know it's difficult to fraud these people, to lie to these people that inflation has already been tamed. So they think of another strategy. They trying to have these officials tell to the people, slowly giving these psychology massage. Please embrace us. We have done a lot. We have tamed the inflation successfully once, and now the inflation is just going to go up just a little bit. Please accept that. And also, by the way, the delinquency rate just gone up just a little bit, but it's all under control. And that is precisely the reason why they are a lot more American. We are talking about regular people. They are financially suffering right now. They're working poor people. They are not people out of job. They have job, but they're working poor. And these people max out their credit card loans because the U.S. government doesn't have what it gets to tame back that inflation. Because Jerome Powell, obviously, he is over data dependent, which I will be making another video explaining these kind of sick culture of like U.S. central bank of data dependent kind of cult. So thank you guys for watching from video. If you like the content that I create, please click that like button for me and share it with your friends, and also leave the comments, because all your like I really appreciate, because we need to let more people know about the truth. So thank you guys for the subscription. I'll see you in the next video. Goodbye.